The Euroviral contagion is underway, and it is clearly evident that Greece is the centerpiece. But today we will discuss how the ECB is actually considering pulling the plug. You came here for the truth, so let me unveil that for you. I want to get into Greece, I want to get into Europe, and I also want to connect that in with the US. So let's begin with this information here that is certainly astonishing. Let's go into this. More than 30% of all government debt in the Eurozone, that's 2 trillion euro of securities, is trading on a negative interest rate. Now, I knew that they were introducing these negative interest rate debt instruments, as they call them, but I didn't realize it was a third of all of them. This is unbelievable, where the amount of such is really happens so quickly all of a sudden. And then further down, it's even more amazing. So when you look at a country-by-country basis, 70% of all German bonds trade on a negative yield. In France, it's 50%. And in Spain, which is further down here, it says basically that widely known as being insolvent, and here they are trading almost 20% of their debt here at a negative interest rate. This is going to show you how serious the situation has become when people will actually pay money for them on a negative interest rate. Doesn't make any sense to me, but this is how bad Europe really is. That's 70%, nearly all of the German bonds at this point are selling at a negative interest rate. This is what I've been warning about for quite a while, that we're going into the negatives. See, when we look at 0% interest rate, how much further can it go? And the truth is that it can become infinite. They are looking into new methods, and 0% used to be the floor, but they've now dug through that and are on their way through the negative interest rates. They're doing this in the banking sector as well. This is no different than what has been tried before with the quantitative easing programs, with everything that they've done, Operation Twist, and all of these other silliness, that they're trying to buy time. But unfortunately, it's not working. Let's scroll down here into this next article. And basically what it said is that the Greek banks are at all-time lows right now, and they're considering pulling the plug. That's why they have been shaken down this far. The ECB staff had drawn up a memo in which proposed the limiting of the emergency assistance. That's the ELA that has been keeping the lenders alive since the new government got into office. So since this point, they have been using this ELA. They do not want to take any bailouts, any further bailouts from the IMF. They simply have had enough with them, and they are instead using the ELA. This emergency assistance is basically a lifeline for them. Without them, they would undoubtedly be destroyed. So they require it. But if they pull the plug on that, we're going to have a very big problem. Moving further down in this article, we're talking about Draghi and the ELA, and basically said that the liquidity assistance should not continue after the summer. And to me, this points to September. Now, I'm seeing a lot of reports about what's going on in September. People are talking about Jade Helm. People are talking about all sorts of different avenues which could lead to a crash in September. I'm not saying that there will be, but there are so many different things, and this is another one. I want to do a whole video, in fact, about the possibilities of September, so I won't get into that for this video, but let's just move on here. The ECB could pull the plug. Greek banks would go bust in a matter of months, according to the S&P, and I think that'll be a lot quicker than that should they pull the plug, because they are in fact already redlining. In the absence of support from the European authorities, we believe that a default on these Greek banks appears inevitable within 6 months. S&P, you have the right idea, but I don't think it will take 6 months. That is quite a long time. Based on what we've seen historically, I think it could happen a lot quicker should anything really get drastic. In my book, I talked about how Europe has the virus. European debt crisis is falling victim to contagion. and essentially talking about what I always do, the one interest rate fits all. Certain countries are there and shouldn't be, but I said they are heavily in debt, and one by one, the weak countries are requiring bailouts and may eventually go bankrupt. That's what I'm warned about back in my book years ago, and this is what I'm warning about today. We have to realize that if Greece does go bankrupt, watch the dominoes fall. They all will continue. We will see massive amounts of bailouts occur. The Federal Reserve will have to stick their nose in and everything else. Let's move on. Speaking of bailouts, look at this. Puerto Rico's top finance official said the government of the U.S. territory will likely shut down in 3 months because of a looming liquidity crisis, and warned of devastating impact on the island's economy. I'm not going to get into the depth of this article, but just wanted to read one more line. A government shutdown is probable in the next 3 months due to the absence of liquidity to operate. Now, where are they getting this liquidity from in the first place? And, what any nation does is essentially prints that money out of thin air. This is no different than what's happening in the mainland of the U.S. It's no different than what happens in, any other country. Essentially, what we have is a total fraud keeping everything afloat. Now, who's going to bail them out? We know specifically that every time a country or one of these territories or whoever it might be, a city, state, county, provincial, municipal, whatever it might be, they're always willing to backstop it with printing money. They will have austerity packages on the people, and they'll do anything as long as it keeps the governments afloat. Now, we're looking at the S&P, we're looking at the NASDAQ, the Dow Jones, and they're all doing well, at least numerically. But look at this, information technology sector earnings growth rate Q1 2015. Are you aware that it's a 0.7 growth rate? They're actually, in fact, growing. The technology stocks, wow, they have done so well. But you exclude one stock, Apple, and all of a sudden it's a negative 5%. They're actually in a depreciation at the moment. This is what's happening with the stock market, is in fact that only a handful of stocks are keeping them pushed up. And that's what is occurring right now. The market is falling, but there are a few stocks, selective stocks, that are being pushed up. This is the truth. Let's look at this. The daily Treasury statement actually suggested that the debt didn't pass this $18 trillion mark for 40 days in a row. That's right, not a penny was spent for 40 days. How unrealistic is this that they don't want to go over the debt ceiling, which every few months happens and there's such a big issue about it, and then as soon as they sign it into law, of course there's always something that has nothing to do with the debt ceiling at all. It's snuck in over there, and all of a sudden we have a loss of sovereignty. This happens every single time. And here they are 40 days in a row trying to fool us. This is actually quite stupid if you ask me. U.S. home ownership rate at 25-year low in the first quarter. People are more poor today than they ever have been in, at least in the past few decades. Look at this out of Reuters. U.S. home ownership slipped to a 25-year low in the first quarter, government data showed, underscoring the housing market struggle to heal from the recession deep scars. So what have they done? Of course, they have essentially made this issue really expanded, and by doing this they relax the lending rules, they continue to bring down the home loan interest rates, they have allowed this to expand. Let's just say that this is going to expand in every single category. Money is being lent out to people it should never be lent out to. If you found the video informative, please give me a thumbs up. And of course, don't forget to become an insider. The Insiders is where I give out all my best intel for free, and that is available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.